Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, interest rates are falling, but mainly for long durations. In the US, economic growth slowed less than previously estimated in the fourth quarter, rising to an annual rate of 2.9% and down from the 3.2% in the third quarter. They have growth that is being fueled by imports, driven by rises in consumer spending. In fact, their merchandise trade deficit has remained over $75 billion a month, surprising analysts who thought it would be tracking lower. American consumers are choosing Chinese imports in their spending habits. Their exports are up 7.3% in the year to February, but their imports are up 10.4% over the same period, with the consumer goods component up 12.6%. Voters and consumers and the federal administration are on different pages here. The president's reaction is to threaten Amazon. In Beijing, the smog alert we reported a few days ago is getting worse, deteriorating because it is now mixed with a dust storm. And it has been revealed that China's Belt and Road rail network, that now stretches from China's Pacific coast all the way into Europe, is a financial burden on China. These trains require subsidies of almost 50% to enable the service to operate in competition with sea freight. The reason the service is expanding is entirely political. We should also note that while much has been written about the parlous state of the Australian federal budget, including by credit rating agencies warning of downgrade if is possible unless they see improvement soon, the actual fact, their latest federal accounts to February show a fast improving situation being built on fast rising tax collections. They are now $10 billion better off than they forecast just in December. This is the sort of news that is rarely reported, but it is a remarkably quick turnaround. If it continues, the heat will go right out of their presumed budget woes, and quickly. The US Treasury 10-year yield has fallen overnight again, back to 2.78%. The Chinese 10-year yield is down now to 3.75%, that's 2 basis point fall, and the New Zealand equivalent fell even further, down to 2.74%, down 8 basis points. And we should note that local swap rates have fallen hard, dropping late in yesterday's trade. They are now back to levels not seen since the end of 2017 and since September for longer-term rates. The 2-10 curve is now just 84 basis points, down from 104 basis points just 2 weeks ago. That is a fast change. The US Treasury 2-10 curve is under 50 basis points, a level not seen since 2007. All the movement in rates down has been at the long end. The short end is holding its levels, and for New Zealand that does not give any room for fixed mortgage rate cuts. The gold price is down even more today, down $16 in New York, and that is at $1,327 an ounce. And oil prices are down as well by more than $1, with the US benchmark now just over $64 a barrel, while the Brent benchmark is just over $69 a barrel. And the Kiwi dollar will start today 0.5% lower as well, at 72.3 US cents. On the cross rates, we're now up to 94.2 Aussie cents and at 58.6 Euro cents. That leaves the TWI at 73.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.